All right, integral in this is what happens to that state local tax deduction. Both the House and Senate essentially remove it. The House at least leaves behind a $10,000 ante, if you will, that can allow you to write off mortgage interest to that effect. But again, the Senate doesn't include that. But the desired effect could already be felt in a number of states, those high tax states, that are rethinking surtaxes or higher taxes on the wealthy. New Jersey, the latest among them. So it might be having the effect without it even taking effect. Former Bush 43 speechwriter Ryun, GOP fundraiser Noelle Nikpour, and Trump 2020 advisory board member, former New York Congressman Nan Hayworth. Nan, and with you, begin with you. New Jersey was the latest state to say about this idea of a millionaire's tax. The Senate president there, a Democrat, saying of the incoming Democratic administration, we might have to rethink this, mainly because it might not be an environment where our taxpayers, even the rich ones, could endure this. What do you think?
Neil, a millionaire's tax never works. Maryland found that out without there being any SALT deduction issue on the table. These high tax states, and I am right in the sights of the SALT deduction elimination, and it's very painful indeed. These high tax states are going to lose residents. There's no question about it. So either they are going to become more fiscally sensible, or they're going to head towards some very, very difficult times that will make it very difficult for them, for example, to finance their debt. So strong advice is to these states, they better get their act together.
Still, no, that's a big price to pay for someone not to have to pay, right? I mean, you're saying on the one hand, you're going to pay higher federal taxes, but look at this as a blessing. At least you're not going to be paying any higher state taxes, which is the case if we're to believe Mr. Sweeney, who's the Senate president in New Jersey, is saying. Noelle?
Oh, I didn't know you were talking to me. Sorry.
Yeah, that thought, this could boomerang.
Yeah, you know what? And I'll tell you what, they don't need much more of a push to get some of their high earner income people to flock to Florida, Wyoming, and Texas. I mean, you know, they're not even spending the money well. And this is another thing. A lot of people are now campaigning on this. The New Jersey governor campaigned on creating that millionaire tax, and that's why you've got people like, you know, Bob Stefanowski, who's running in Connecticut, who's running on trying, you know, to phase out the state tax in his state, Connecticut, where people are complaining. So this is kind of not only something that people are going to be campaigning on, but this is causing all these states, like you say, to reevaluate what exactly they're doing, because they're not going to be keeping these people, and they're not going to be enjoying the great, you know, philanthropic things that they do in their states as well. They're going to be moving to other states. That's why Rick Scott loves New York, and he loves New Jersey.
I don't know if they think that long term, though, Ned. You know, like, I think when push comes to shove, if they can shove a little bit more at the rich, they will. They can return to New Jersey the top rate to almost 11%, which it was before Chris Christie came in and brought it down to whatever it is, a little under 9%. They'll do it because they'll say, it's the rich. They won't think longer term, to Noelle's point or the Congresswoman's point, that that crowd can up and leave, and there is a point at which they do that. What do you think?
No, I don't think they think long term, and I do like the debate of us having, you know, why are red states really funding the fiscal irresponsibility of the blue states? Because that's essentially what we're talking about here, Neil. But I got to tell you, I mean, I know we're talking about SALT and there are some House Republicans that are saying they will not vote for this Senate bill if this aspect remains in the bill. I'm kind of at the point with this Senate plan, Neil. I hope it doesn't pass the Senate. It's terrible. It's not even real tax reform in my mind. It's tax deform. I mean, if you're a private equity guy or you're a hedge fund or you're a real estate developer, you love this plan. If you're a middle or upper middle class, you hate this plan because all the bill is being passed on to you. So I love that we're having this debate and that the state legislatures and the blue states are having to have a debate on, are we going to spend more money? What do we do about spending if we get the SALT removed?
Right.
I hope this Senate bill is very problematic in my mind.
Well, I admire your gut saying that, Ned, because, you know, Nan, he's not the first guy to say that.
Right.
This idea that something is better than nothing, not all the time. This something could be worse than nothing. And there are a lot of folks who are realizing that to pay for a corporate cut that will be permanent, whatever you think of that, against individual cuts that won't be across the board and won't be permanent, that's rankling some people and could boomerang on the very folks pushing it. What do you think?
Well, Neil, I agree with you. I do think there's something, obviously, that we need to get done desperately is to reduce taxes on businesses of all sizes in this country. They are the job creators that will make life better for every American, because the more people we can put to work and put into the revenue stream, the healthier the federal fisc will be. But it's definitely true that because the Senate is using this reconciliation mechanism and because we've got so-called deficit hawks, these pay-fors are going to kill us, along with the fact that we want a middle-class tax cut, and it's only 95% of taxes are paid by the top 20%. So the burdens just keep kind of accumulating in that whole situation on the taxpayers who actually are the most productive. And why aren't they attaching carried interest?
Well, you could go ahead, finish that point.
No, I mean, Neil, Nan's hitting some of these points. I mean, first of all, why is the small business tax in the Senate bill up to 30% and temporary? Why haven't we dealt with the carried interest loophole? Why are some of these real estate developers getting the depreciation from 39 to 25 years and cost hundreds of billions in revenue for Treasury? I mean, this is a tax plan, again, that these uber wealthy are going to love. And, when Orrin Hatch accuses the Democrats of playing, well, this is just a tax cut for the rich, there are some of us who are deeply conservative who are really starting to get a sense that this is a tax plan that benefits the uber wealthy hedge fund and private equity and real estate guys. And so when you talk about a temporary cut for small business pass-through tax, even a temporary cut for the personal tax cuts, this is deeply frustrating. On top of that, Neil, pushing back the corporate tax a year, this is unacceptable. These are non-starters for me as a conservative.
I think you're onto something. I do. And Noelle, you and I, when you were last here, we were talking about the idea. I think everything comes down to people's paychecks next year, assuming this passes, which is a leap to Ned's point. But and if they don't see a demonstrable difference in their net pay, whether it's on a card or something as thick as the Manhattan Yellow Pages, a tax form, they're going to be annoyed. And sometimes Republicans might regret getting that done when a lot of folks don't seem to think they got much out of it. It could come back to bite them. What do you think, Noelle?
Right, absolutely. And look, Trump ran on doing all sorts of new legislation. If we don't get tax reform, and this looks bad on all the Republicans, Mnuchin, Trump, it looks bad on everybody. And if we don't get it done, how it's going to be taken out? It's going to be taken out in the polls.
All right. Well, watch very, very closely. Guys, I want to thank you all very, very much.